certainly operators are standing by, and we're ready to take your calls. So, Mr. Reed, do you seek time before the committee? If you'll join Mr. King up here, we'll try and make sure that the opportunity to allow members to give their feedback is important. I would say to both of you, as I said to the distinguished gentlemen who were here originally, anything you brought in writing, we'd appreciate getting a copy for us from stenographer, and without objection, we will enter that into the record. Distinguished gentleman from Iowa is recognized.
Thank you, Mr. Chairman. I appreciate the opportunity to address the committee here today and make a couple of offers and proposals that I think take this excellent bill into a better category yet. And I'd say first that H.R. 1 was the best vote I've put up in the time I've been in Congress, and that covers some territory. I would like to add to what Mr. Burns said is that there were some people that didn't pay taxes that are the beneficiaries of that, and they're the people that got a raise because of the competition for labor because they knew the economy is increasing. And not that I could improve upon that speech, Mr. Chairman, but I just wanted to make that point. It was excellent. All of the things delivered. What I have first, I'd like to take up one of two amendments that I offer. The first one, if I could do King IA 269, and it addresses this. I'm going to call it here a bill that I had drafted, introduced. I'm going to call it the Kitty Rehberg bill, even though we don't have necessarily that name on that, because she's the one that brought it to my attention. And I served with her in the Iowa Senate back a number of years ago, and I know their operation. It's the typical quintessential family farm. A small operation, most of everything or perhaps everything paid for. A tight operation that they're not expanding, they're not shrinking, they're taking care of their own, and they're a C Corp. And they had been operating up until H.R. 1 passed and was enacted. They were operating with a 15% tax rate because there was a $50,000 cap built into the old law that was eliminated with H.R. 1. And so they're in the category with, I suppose, thousands of other Americans that are going to have adjusted gross income of less than $50,000 that saw their taxes actually go up because of H.R. 1. So if you think of it at the $50,000 level, then it's a 6% increase from 15%, which is what their rate was, up to the 21%, which we leveled for all the C Corps. And that would be a maximum tax increase for them of $3,000 a year. It's kind of a bitter pill to swallow when you're a small operation doing things right and you're watching a big tax cut bill come along. And so this is just, I believe that the staff on Ways and Means wrote this way just for conformity purposes. I don't think there was any other policy reason involved, and we can't seem to find one either. So I would just encourage this. This language does this. It restores the language that existed before H.R. 1 was signed into law that would allow for those with an adjusted gross income up to $50,000 that are C Corps to go back to the original 15% tax bracket. And it's just, I think it's a humane thing to do to the smaller operations. I know the one that I illustrated, former state senator Kitty Rehberg, I know that operation. I know that represents thousands of Americans in the same category, although they weren't a big statistic, and I don't have a score for this, but it can't be a lot in proportion to what we're working with here, Mr. Chairman. So that would conclude my opening statement on it. I have another amendment, but if you'd like me to proceed to that or take questions, I'm happy to do either.
I would proceed to whatever you would wish to discuss with the committee, and then they will have that opportunity to go through those with you. Gentleman's recognized.
Thank you, Mr. Chairman. The second piece is King IA 268 will be the amendment, and it's legislation that I've drafted and introduced to this Congress a number of years ago and in every Congress since, and it's called the New IDEA Act. And what it does is it clarifies that under this legislation, it clarifies that wages and benefits that are paid to illegals are not tax deductible. It gives the employer safe harbor if he uses E-Verify, and therefore we have a way to enforce this thing through the tax code. It has a 6-year statute of limitations built into it, so it's got a cumulative incentive for the employer to clean up his workforce, but it doesn't jerk the rug out from underneath anybody. It lets them make their adjustments accordingly. The net effect of it is that, round numbers figuring, is that if you had a $10 an hour illegal and the IRS comes in and does an audit, and they would run the data of the employees that are listed in the tax code through E-Verify. And if they can't be verified through E-Verify, then the IRS then can rule that it's an illegal hire. And in that case, there would be interest and penalty and taxes that applied to those wages, because once it's denied as a business expense, then that goes back into your gross receipts, shows up as net income and taxable. So it would take your $10 an hour illegal to right at $16 an hour by the time you add up the tax liability and the interest and the penalty. And so it's a 60% increase in the cost of illegal labor, and that would be a strong enough incentive that many employers would opt to clean up their workforce. The bottom line on this becomes this, that the closest thing I can get to a legitimate score for this bill was produced by Center for Immigration Studies, not CBO, but Center for Immigration Studies, and they produced a score here within the last year of $25.4 billion a year, that's with a B, or for the purpose of this bill, 10 years, $254 billion in revenue that it would generate. So we're looking at a lot of red ink, increasing red ink, looking for ways we pay for things. This restores the rule of law, and it puts the IRS into the position of enforcement. You don't have to wonder if the next administration or this administration is going to enforce the law. We've got the IRS that would be out there doing that, generating the revenue. And into this bill, we also add a requirement that the IRS builds a working team with the Social Security Administration and the Department of Homeland Security, so the hands of the federal government are working together on the same cause, and that's to enforce existing laws. Scoring up at $254 billion, I don't know how the Ways and Means Committee could turn down such an offer, and I wanted to make sure that the Rules Committee had an opportunity to consider these proposals. I have other good ideas, but in the interest of time, I limit them to two today, Mr. Chairman, and I would conclude my opening remarks.
Mr. King, thank you very much.